Right now, something strange is happening in the silver market, and almost nobody is explaining it clearly. Paper silver prices are crashing hard, headlines are screaming panic, charts are bleeding red, and at the exact same time, physical silver is becoming harder to find. Premiums are rising, delivery times are stretching, and some dealers are quietly limiting orders. This is the moment where most people get confused, emotional, and make the worst possible decision. So before you do anything, stay with me, because what you're about to hear might completely change how you see silver. In the last few days, silver on paper has dropped fast. Futures markets are dumping contracts, ETFs are bleeding ounces on paper, and traders are hitting the sell button without hesitation. If you're only watching the chart, it feels like silver is collapsing. But step away from the screen for a moment and look at the real world. Physical silver isn't collapsing, it's tightening. And that disconnect is not normal. That disconnect is the story. Welcome back to Silver Pules, where we cut through the noise and explain what's really happening behind the price. You want clear nonsense silver analysis without hype or fear bait? Make sure you like this video and subscribe to the channel. It helps more than you think, and it keeps you ahead of the crowd when things get crazy, like they are right now. Let's talk about paper silver first, because that's where the chaos starts. Paper silver is not real silver in your hand. It's contracts, promises, derivatives, and leveraged bets traded at lightning speed by banks, hedge funds, and algorithms. These markets are designed for speed, not truth. When fear hits, paper silver can be dumped in massive volumes within minutes. Not ounces, not bars. Contracts representing silver that may never be delivered. Now imagine this. One large institution decides to reduce risk. Another follows. And an algorithm triggers stop losses. Then margin calls hit. Suddenly, thousands of paper contracts flood the market. Price drops sharply. Headlines appear. Retail traders panic. More selling follows, and the price falls even further. None of this requires a single ounce of physical silver to move anywhere. But here's where things get interesting. While paper silver is being dumped, physical silver is not following the same script. Dealers don't instantly slash prices. Mints don't magically increase supply. Mints don't suddenly produce more metal overnight. Physical silver moves slowly, and it moves based on real demand and real availability. Right now, many physical buyers are not selling, they're waiting. Some are buying more. They see lower paper prices as a discount, not a warning. That's why you see premiums staying high or even rising while spot price falls. That's why you hear about delays, allocation issues, and limited inventory. That's the market telling you something is off. So how can paper silver crash while physical silver tightens at the same time? The answer is leverage. Paper silver markets are massively leveraged. For every ounce of real silver, there are dozens, sometimes hundreds of paper claims. As long as everyone plays the game and settles in cash, it works. But when confidence drops, the system shows cracks. The big players don't want exposure, they exit paper positions fast. They don't care about physical delivery, they care about balance sheets. Meanwhile, physical buyers are often long-term thinkers. They're protecting purchasing power, they're hedging against currency risk. They're not trying to flip silver next week. This is why you see a disconnect. Paper silver reflects fear and forced selling. Physical silver reflects trust and scarcity. And this is not the first time this has happened. We've seen this movie before. During previous market shocks, paper silver collapsed while physical premiums exploded. People walked into coin shops expecting bargains and walked out empty-handed. Online dealers showed out of stock signs while charts showed lower prices. A confusion always happens at turning points. Now here's the part most people miss. Big institutions understand this difference very well. Don't buy silver the same way retail does. When they want exposure, they use paper. When they want safety, they move quietly into physical or long-term positions when fear peaks. Retail usually does the opposite. Retail panics at the bottom and celebrates at the top. Ask yourself this. If silver was truly worthless at these prices, why isn't physical silver flooding the market? Why aren't vaults overflowing? Why aren't premiums collapsing to zero? Markets don't lie when you know where to look. Another important piece is trust. Paper silver requires trust in the system, trust in exchanges, trust in settlement, trust that contracts will be honored under stress. Physical silver doesn't require trust. You either have it or you don't. And when global uncertainty rises, people always move toward what they can hold. This is why paper markets can break down temporarily while physical markets tighten. It's not a contradiction. It's a signal. Now let's talk about psychology, because this is where most money is lost. When prices fall fast, fear takes over. Social media fills with doom posts. Influencers scream collapse. Traders look for confirmation of their fear. But smart money looks for imbalance. They ask, why is this happening, and who is being forced to sell? Forced selling is never a sign of long-term weakness. It's a sign of short-term stress. And short-term stress often creates long-term opportunity. This doesn't mean silver can't go lower on paper. It can. Markets can stay irrational longer than people expect. But the widening gap between paper and physical tells you something important is building beneath the surface. At Silver Pules, we don't tell you what to buy or sell. Focus on understanding the structure of the market so you're not reacting emotionally. If you're watching only price, you're missing half the picture. If you're watching only headlines, you're missing the truth entirely. Think about it this way. Paper silver is like a digital scoreboard. Physical silver is the actual game being played on the field. When the scoreboard glitches, the game doesn't stop. It keeps going underneath. As more people start to realize this disconnect, behavior changes. Some move out of paper exposure, some convert paper profits into physical, some simply stop selling. That's when paper prices stabilize, sometimes violently, because the selling pressure disappears just as fast as it arrived. This is also why sudden reversals in silver can be brutal. When the selling stops and buyers rush back in, price doesn't politely climb, it snaps. Shorts scramble, momentum flips. And the same voices screaming collapse suddenly go quiet. Now, here's a question worth asking yourself. Are you reacting to price, or are you understanding structure? Are you following fear, or are you watching behavior? Because right now, behavior is telling a different story than price. Physical silver shortages during paper crashes are not accidents. They are symptoms of a system built on leverage and confidence. When confidence wobbles, cracks appear. And those cracks always show up first in the physical market. This is why seasoned silver watchers pay attention to premiums, delivery times, and dealer behavior, not just charts. Charts show what already happened. Physical markets hint at what's coming next. We're entering a phase where these signals matter more than ever. Global debt is rising, currencies are under pressure, geopolitical risk isn't going away. In that environment, tangible assets don't lose relevance overnight. They gain it quietly while attention is elsewhere. So if you're feeling confused right now, that's normal. This market is designed to confuse you. But confusion is also an opportunity to slow down, step back, and think clearly. Before you make any decisions, ask yourself one simple question. Is this move driven by real supply and demand, or by paper panic? If you found this breakdown helpful, drop a comment below and tell me what you're seeing in your local market. Are premiums rising where you live? Are dealers limiting supply? I read the comments, and your insight helps everyone watching. And if you think this video can help someone else understand what's really happening, share it. These are the moments when clear information matters most. This is Silver Pules, and we'll keep watching the signals that others ignore. Stay sharp, stay calm, and I'll see you in the next one.